Well, I have a bunch of information on a bunch of different things I want to share in this video. And I thought rather than breaking it into like 10 different videos, let me just put it all into one video here. And let me say this, if you are up to date on all this stuff we're about to talk about in this video and all these charts and all this data and all these stocks I'm about to show you, you are really up on your stuff. That's all I'll say about that, because we got a lot to get into in this video. And so, yeah, we're just going to get into it. Hope you guys enjoy. As always, make sure to subscribe to the channel if you haven't already subscribed. Also, get some free stocks from Moo while they're still giving out those free stocks. Check out pinned comment for those. Get 5 free stocks valued up to $3,500 each, okay? First thing I want to talk about is inflation. Obviously, today was CPI day. And so what we're looking at here is some pretty insane things. Used vehicles. This is a 12-month change of pricing, okay? Used vehicles, 40.5%. I mean, I knew used vehicle market was a little insane, but I didn't know it was that insane. That's on a whole different level. 40.5% is just ridiculous, right? Something we do know is that is unsustainable. That will come down and come down fast. That's all I'll say about that. There's no way that is a sustainable number. I would see that number should start coming down with even in the next 6 months, to be honest, and then in the back half of this year in a massive, massive way. Because, yeah, you shouldn't be seeing used vehicles up 40%, okay? Gasoline, 40%. So gasoline, this is something that moves around a lot. I wouldn't be surprised if gasoline's more expensive in a year from now or less expensive in a year from now. Only way I really see it less expensive is if we were to get into an actual recession or something like that. Then I could see gasoline actually going down. Outside of that, it's hard to see it down in the short term here. Now, what does happen with the oil market is essentially when prices stay good for a few years, all of a sudden you see everybody try to start fracking and try to get in this game because there's a lot of money to be made. And you know what ends up happening? Next thing you know, gasoline prices, oil prices, everything starts tanking, okay? So, yeah, but that's insane. I drive EVs, obviously, so I'm not really tied into what's going on with gasoline price on a daily basis, but that's insane, 40%, okay? Rental cars, 29%, transportation over 20%, and hotel rooms over 20%. Not surprised there. With, Rona's been going crazy, but it's starting to calm down now, and it's going to continue to calm down. I'm not surprised that hotel rooms are up a lot, transportation's up a lot, rental cars are up a lot, things like that. Doesn't surprise me. Furniture, with how insane supply chains have been, doesn't surprise me. Furniture is really messed up right now. And 17% up there year over year. That's rough. Household energy up 14.7%. year over year. That's incredible. New vehicles up 12%. This is almost shocking, right? New vehicles up 12%. Used vehicles up 40%, okay? Like I said, this number is so ridiculously unsustainable, I can't even, fathom that, okay? That's going to come down like nobody's business. But, new vehicles up 12% there. Appliances up 8.5%. Not too surprising as well with supply chains being messed up. Overall inflation, obviously, you guys know this, right? Came in at 7.5%, 7.2% was expected. Food at home up 7.4% there. Housing up 5.7%. I mean, I don't know. I feel like housing's up more than 5.7%. That's all I'll say about that. That's the one number I was like, yeah, government, you giving us the right numbers here? I don't know about this, man. I don't know about this. Housing up 5.7%? Okay. All right, whatever. All right. Clothing up 5.3%. Airfare up 4.9%. Recreation up 4.7%. Personal care up 4.3%. Rent up 3.8%. What market? What market? Markets I live in, I think rent's up a whole lot more than 3.8%. Alrighty, whatever, okay. Pets and pet products up 3.7%. I don't have any pets, so I can't speak on that. Alcohol, I don't drink, so I can't speak on that. 2.7%. Hey, if you're a drinker, it's not a bad time to be a drinker, right? Only 2.7% there. That's not bad. Medical care. So what? Medical care, surprisingly, hasn't gone up that much. 2.5%. By the way, we just got medical bills. I don't know if you guys know, but I had a kid recently. Yeah, $59,000. $59,000. Woo, okay. Good thing we have good insurance. But yeah, so much of that is covered, thank goodness. But yeah, my gosh, I'm sure if you ever spend some time in the hospital, you know how insane the bills can be. IT, hardware and services, 2%. Toys, 2%. College tuition, wow, rare. College tuition only up 1.9%. That's the one thing that's usually always going to the moon. My gosh, you see how much college tuition's gone up over the past decade or so. Prescription drugs, 1.3%. That's because there's so much pressure over the past number of years, essentially, on the prescription companies that, the pharmaceutical companies, that it's really tough for them to raise price. Believe me, if they had a chance to raise price and it wasn't so, against everything right now, they would be raising price. Believe me on that, okay? So nonetheless, inflation's ugly. We all know about that. I've been speaking about that for a year now. And, it's going to continue to be ugly for a bit, but I expect things to start coming down in quite a substantial fashion toward the back half of this year. I would say even in mid-year, you'll start to see a lot of these numbers start to shrink down and down and down. So that's some good news. Obviously, there still has to play out there, okay? Next one up here, U.S. mortgage rates surged to the highest level in more than 2 years. Look at this. This is 30-year fixed rates for mortgage rates here. And if that was a stock price, man, I would be happy, okay? I'd be very happy with that price performance there. But no, that is mortgage rates. And they have been going pretty bananas recently. Obviously, they were unsustainably low for a while there, 2.7%, 2.8%, right? Now, a lot of people are cheering this, saying, woo, go up mortgage rates. That's going to bring down the price of real estate, right? Okay, so one, just because mortgage rates go up doesn't necessarily mean that home prices are going to fall. Because here's what you have happen essentially, okay? I want to explain this concept, then we'll get back into this. Well, if mortgage rates go up, then you're going to have less and less people that already own a home want to go buy another home, right? Because you're locked in at, let's say, a 2.7% number, 2.9% number, right? You're not very incentivized to move unless you got crazy money behind you, right? Or unless you really have to move. Outside of those two scenarios, it's like, I think I'll just stay in my house I'm already in because we refinanced and got a 2-point-something% rate, right? And why go out there and get a new property? And so what could end up happening is the supply of homes could still end up being low, which means prices end up remaining high, okay? Also, let's say prices do come down a little bit, right? Let's say prices drop a bit. Well, guess what? If mortgage rates are much more expensive than they were, let's say, a year ago, well, now your payment is still going to end up being pretty darn high because of how high mortgage rates are. Never mind, in a scenario where you can't, let's say, refinance down the road because mortgage, and I believe you would be able to refinance down the road. I doubt we're at the, this is the lowest we'll ever go for mortgage rates, but let's imagine a scenario where you can't refinance for a long, long time at a lower rate, 5 years or 10 years or something like that. That would obviously put us in a scenario where, you're paying a really high mortgage rate compared to where you were paying not that long ago, okay? So I think it's not as easy to just say mortgage rates going up, home prices coming down, woohoo! It doesn't quite work like that, although you would think it works like that, okay? So that's quite interesting. Stitch Fix. I want to talk about a couple stocks here, okay? And then we'll get back into a bunch of other stuff. Stitch Fix. This stock's trading at $15 a share. Not a stock I personally own, but the business model has always been pretty darn compelling. They've had a pretty sticky customer base over time. It's a recurring revenue stream business model. And this stock is now back to where it went public at years ago. Like 5 years ago, if not more than 5 years ago, this company went public at $15 a share, and here today it's $15 a share. So that stock has had some big ups and some big downs, and it's just been absolutely devastated. And there's no volume in a stock like this. 2.2 million shares trade hands on a day like today when it's down 5.5%, and the average volume 3.6, 3.7 mil. There's just no buyers for a stock like this right now, right? And that's the market we're kind of living in right now. Trade Desk, TTT, I was looking at this one. I was looking at a lot of different stocks right now. And I just want to highlight this one. Every once in a while, it's good to remember that, some game-changing companies can be some game changers for your portfolio and for your entire financial life, essentially, right? And TTD definitely fits that criteria. This stock was a $2 Chuck stock back in 2017, a $2 Chuck stock. And here today, it's $82, right? $82, and that's significantly off its 52-week high, by the way, of 114. But this is just another one of those good examples of a company that just, continued to grow and grow and grow. And throughout the years, it went on some vicious dips. If you really zoom into this chart, you're going to see some of these dips were like 20%, 30%, 40% type drops. But all you had to do was basically hold this beast, and you've done pretty well for yourself with a company like that. And they might even have a better future in front of themselves than they do the past. Let's just put it that way. So not a stock I own, but I love kind of highlighting some of these stocks sometimes because it's important in these sort of markets when it's a downtrending market, it's a vicious market. People have been beaten in this market, right? It's important to remember like why you're playing this game, and to remember these sorts of game-changing gains. You're not going to always get this insane of a gain, right? But do keep in mind that over time, great companies double, triple, quadruple, 5x, 10x over the coming years. Obviously, this is way over a 10x scenario. 10x would have been like 20-something dollars a share. This is an $80 stock here today. So that's just tremendous, right? Machine Gun Kelly. Yeah, you're probably wondering why I got to talk about Machine Gun Kelly. So Machine Gun Kelly is a former hip-hop artist who became a very, very popular, I guess you would call him a punk rock guy now, and really, really popular. And the reason I'm bringing this up, and this is really, really important, he's got a new music video out, and he's got a plant-based pepperoni bowl in front of the pepperoni. Okay, this is amazing. This is amazing. That's all I got to say about that. I hope this song is super popular. I saw it was a number 6 on trending, yesterday, and today it's number 14 on trending. Yeah, and so I don't know how the chef. I don't even know how this happened. So I'm guessing the chef must have paid for some product placement, I'm guessing, in this music video. And it shows this situation. And then he eats a piece of pepperoni. It's interesting nonetheless. But yeah, TTCF getting some product promo out there. If you didn't know, they've launched pizzas in a lot of big stores recently. I've seen it in Kroger-related stores. I've seen it in Target stores, things like that. So hey man, Machine Gun Kelly, I might have to buy a concert ticket, so I don't probably know any songs, but I know that one you dissed Eminem on back in the day. But outside that, I might have to buy some concert tickets just for the plant-based pepperoni promo there, okay? Eli stocks. So Eli stocks are a stock I owned quite a while back. Haven't owned it for a while now. If you didn't know, Eli bought out Topgolf about a year ago or so. And that was a genius acquisition, by the way. Eli was always invested in Topgolf, but now they just straight up bought them, right? Topgolf is a beautiful business. I mean, if you've ever been to Topgolf, it's incredible. And there's a lot of beautiful things about Topgolf. One is people have to pay for the bays. 2 is people love to get food and drinks while they play, essentially, which is just a profit center for the company. And, companies like to do even parties at Topgolf. And it's just, if you go there, it's usually packed. It's usually very, very busy. And the business model is awesome, okay? So that's amazing. And then the last part that the beauty is in Topgolf business is, in order to build something comparable to a Topgolf, I'm telling you, you better have some crazy money behind you. And I mean some crazy money, because those structures alone, I mean, you're talking about between the land and a popular city, you're going to be spending tens of millions of dollars probably just on the raw land, plus the building, plus the workforce. I mean, a lot of these Topgolfs employ hundreds of employees. It's insane. And so I would say it's a very capital intensive business model, and Topgolf's just done a very, very good job with this business model. And so Eli's awesome. This is a stock that I think is a great stock to buy, in my personal opinion. And you would think, they went down 1.5% or 1.3% after hours. You'd think the earnings must have been bad. Here's what the earnings are, okay? Fiscal year 21, $3.1 billion of revenue versus $1.5 billion previous year, right? Topgolf numbers obviously weren't in there. These are GAAP results, by the way, generally accepted accounting principles, not non-GAAP. $205 million here, okay, versus $106 million loss the previous year as far as that goes, and $1.82 EPS versus $1.35 loss a year ago. So, which is a 317 difference there. I like it. I think it looks really darn good. The stock's very compelling. If it wasn't for the fact that there's a million other stocks, I'd be out there buying the stock tomorrow. And that one's just in a really good position. And they've in terms of the properties they've built or have been building, from what I've seen, most of them are at very low interest rates. Very low interest rates. So imagine we're in a scenario, right, where interest rates do have to rise over the coming years. Well, it begins to become that much harder to even compete with Topgolf, because all of a sudden now you might have to pay, a much more substantial rate on $50 million loan or $100 million loan versus what Topgolf had for all the properties they built out over the past several years. So basically, Eli, good stock, okay? SoFi Technologies, this is an interesting one I thought I would bring up here. So SoFi's trading at 12, right? And SoFi's got a lot of folks that like that stock for the long term. It's not a stock I personally own, but it's interesting. Some people are playing this stock basically this week. And the reason they're playing the stock, right? And I'm not talking about the longs. The longs are obviously in this stock for the long term, or they are supposed to be in the long for the long term. But there's some traders that have gotten in the stock over the past couple of days. Okay, the reason there's been some traders that have tried to get in the stock over the past couple of days is the Super Bowl is about to happen in a few days. And the Super Bowl is going to be held at SoFi Stadium. And if you didn't know, the Super Bowl is kind of a big deal. And even if you're not a football fan, like, people always watch the Super Bowl, okay? And so it's at SoFi Stadium. And so what some traders are playing is they're assuming that the stock is going to be a beast on Monday. Because, and I know this sounds ridiculous, okay, but because the Super Bowl, is going to be held at SoFi Stadium and it's going to be so top of mind that people are going to buy SoFi stock on Monday. That's what they're saying, okay? And I just find that a little ridiculous. It could end up working. Nothing surprises me in the stock market anymore, so I wouldn't be surprised if the stock moves up on Monday, to be quite honest, like 3, 5, 10%, I don't know. I think it's a little ridiculous, but at the same time, I can't discount something like that happening. It's a stock market at the end of the day, and some things will happen that just make you say, really? Like the stock's going up because they had a football game there, Super Bowl? Don't be surprised. That's all I'll say about that. Don't be surprised if that does end up happening there. I don't try to do any of those short-term plays. I feel like it's a little bit more of a gambling play. I try not to get involved with that. And by the way, if you're a long-term investor of SoFi, I don't even think you should really want that, because if those people are playing it from a long-term perspective, they're probably just going to sell out before the close on Monday or sell out at some point next week. So, you don't really want those shareholders in your shareholder base, because they end up just creating these artificial kind of moves up in the stock just for it to come back down. It's no bueno, okay? Look at this here. So, what we're looking at is options activity, basically about this time 2 years ago. So in 2020, February 2020. Now, keep in mind, options activity was ramping up quite a bit because there started to be a lot of Rona scares at this time. It wasn't like we were in full shutdown or anything like that at this time, but there was a lot of conversation about, hey, man, this thing might be something serious. And in January, people started really hearing about it, but no one was really taking it serious at all. Starting in about mid-February, people started to be like, oh, shoot, man, some might go down here. And, this could get ugly. And so you started having a ramp up in option activity basically at that time, right? And here we are at that time, 25 million contracts or so in volume, right? And so you think, well, yeah, that must have been a very elevated time compared to where we're at now, right? We must be way lower because, there's not nearly as much scare in the market, or is there? Well, let's see the option volume today. 43, almost 44 million. I mean, we don't even have anything like that going on. It's not like, there might be this once in a 100-year pandemic that might happen. No, not like that at all. And here we are trading, options activity has just gone through the roof. And I think there's a lot of reasons for this in the end. And I think some of them go back to people maybe wanting to gamble a little bit more in the stock market than in the past, right? And trying to play shorter term things from shorter term perspectives and trying to do all these complicated things instead of just buying the dip in great companies. And so many people are trying to, do all this crazy trading and stuff. And it's just like, it's ridiculous, to be quite honest. It's completely ridiculous. And that's the sort of market we're in right now. And you know who loves this? Wall Street loves this. The brokerages love this. They're going to make more money off all this option activity. Options is one of the more profitable spaces for Wall Street in the end. And so, all this option activity going crazy, man, Wall Street loves this stuff. And I don't think people are really understanding. They're playing right into Wall Street's hands in the end, doing all this crazy option activity. And so I just look at it and I'm just like, geez, man, that's ridiculous. Like, there's no reason we should be way above where we were in February of 2020. There's no reason we should be above that, but we are. And that's just another one of the crazy things that's going on in this market right now. Now, inflation. This is ridiculous, okay? I got to speak about this. Tired of inflation? The Federal Reserve's actions won't provide any relief for months, okay? Well, all right. So if you're tired of inflation, right? Well, and the Fed raises rates, is that really going to be good, necessarily? Well, that means potentially a lot less auto loans. That means potentially a lot less home loans. And if you do go get an auto loan or a home loan, get ready to pay a lot more. That means credit cards could even become more expensive if they weren't already expensive enough. And overall, it could end up meaning potentially, keyword is potentially, bad things for the overall economy. And is that what folks really want? So I just think my parents always used to tell me back in the day, be careful what you ask for because you might just get it. And, I say that in a situation like this, okay? Hope you guys enjoyed this video. As always, you know what's crazy is if you don't get those free stocks from Moo Moo down there, pin comment. Much love as always. Make sure to subscribe to the channel and have a great day.